Many investors sheared away from Capitec Bank following the collapse of African Bank last year, as they feared Capitec may also be hit by bad debts on its unsecured lending book. Now, the collapse of African Bank also affected the Big Four banks' ratings agencies downgraded their credit ratings, but Capitec is up nearly 100% over the past year, massively outperforming the major banks and the broader financial services sector. Joining us now from our Cape Town studios to discuss the outlook for Capitec is this week's Finweek contributor, Moxima Gama. Moxima, thanks for your time. Capitec, a phenomenal growth that we have seen in performance. What can we attribute this to?
Well, if you look at the time it surged from the time that ABLE or African Bank actually went AWOL, it's pretty much around that period. Because they were both retail banks that were lending loans that were not backed by assets, it was pretty much a switch from ABLE into Capitec, which saw quite a phenomenal surge, as you said. So that's what pretty much caused a lot of that upside. Also, on the other side is that Capitec is upped its game a bit with the disruptive technology. So it's kind of challenged a lot of the Big Four banks, and actually even taking some of the middle to higher income clients because of the better product offering. So it's challenged a lot of the banks, which is causing at least increasing their profit margins by having that shift from clients from one specific bank into Capitec.
Moxima, if we look at the share price performance from around May, we noticed that there was a bit of pressure that particular stock came under. Why is that?
Well, it was the downgrading, which actually affected a lot of the banks. We did see a bit of a retracement there. But there was also a specific reason with the Department of Trade and Industry, who then reduced at least the cost or interest rates, the maximum interest rates on unsecured credits. So people, like investors, were pretty worried that that will gnaw at the profit margins. But when we look at technical analysis, it was a pullback that was well overdue. It really rallied, and it was time for it to take a break or take a breather, which it did.
Moxima, if we take the views from the likes of Goldman Sachs and Merrill Lynch, they've been quite bullish on Capitec. Your outlook on this particular stock?
Technically, yes, I would share the same sentiment. Like I'd mentioned, that there was a bit of a retracement, which was justifiable. It was overextended. So we do see a good entry, at least around that 510 level, with potential gains to 890 in the long term, because it's quite a big jump. So we you know, at this time, the technicals and the fundamentals do concur that we are pretty much bullish and would actually start initiating long positions at least around that 510 level.
Moxima, just the final one. We've been hearing that Capitec could possibly replace the fourth spot in terms of one of the four major banks. Are you in agreement with this statement or not?
It could. I mean, it is. I mean, the client base is increasing quite rapidly, and there's a lot of foreign buying that's coming in. It's currently sitting at 16%, and a lot of them see it going, or a lot of the research hubs are seeing it go up by 30% in the long term. So it is kind of putting quite a big mark in that, and also going to be listed in the emerging markets index. So it is showing signs of being a bigger competitor and taking the space of a lot of the four major banks.
Moxima, thanks so much for that. That was a Finweek contributor, Moxima Gama. Up next, let's unpack this week's cover story.